Is the stock market crashing in 2025? Join me as I dive into the stock market predictions and take on the challenge of figuring out if it's really going to crash in 2025. We've seen it time and time again. The stock market surges to new heights, reaching unprecedented levels that make investors feel invincible. The excitement is palpable, with traders celebrating and stock charts showing upward trends that seem unstoppable. It's a time of optimism and confidence, where every investment seems like a sure bet, only to come crashing back down to earth in a spectacular fashion. The euphoria quickly turns to panic as the market plummets, wiping out gains and leaving investors scrambling. Historical footage of past market crashes reminds us that these downturns are not just theoretical. They have real devastating impacts on people's lives and financial well-being. The big question on everyone's mind, of course, is whether 2025 is going to be the year of the next great crash. As we move closer to this pivotal year, the speculation grows. News headlines are filled with predictions and analyses, and people everywhere are watching the stock market news with bated breath, wondering what the future holds. There are certainly those who believe it will be, pointing to ominous signs like the increasing levels of global debt. Financial experts warn that the world is drowning in debt, with countries, corporations, and individuals all borrowing at unprecedented rates. This mounting debt is seen as a ticking time bomb that could trigger a financial meltdown. The slowing pace of economic growth, which has been a cause for concern among economists. As growth rates decline, the fear is that economies will not be able to sustain themselves, leading to a potential recession. Analysts are closely monitoring economic indicators, looking for signs of trouble ahead, and the rising specter of geopolitical tensions. Conflicts and political instability around the world add another layer of uncertainty to the economic landscape. Geopolitical analysts discuss how these tensions could disrupt markets and economies, creating a volatile environment that could precipitate a crash. But are these fears justified, or are they simply the result of an overactive imagination? Financial experts debate the likelihood of a crash, with some arguing that the market fundamentals are strong and that fears are overblown. Meanwhile, everyday people discuss these issues over coffee, trying to make sense of the conflicting information and decide how to protect their investments. The uncertainty is palpable, and the stakes are high as we approach 2025. In the past, we've seen the stock market respond to all sorts of external factors, from natural disasters to presidential elections. Sometimes it's volatile, sometimes it's steady, but one thing's for sure, it's never boring. So what's in store for 2025? Will it be a year of continued growth or a year of sharp decline? That's what we're going to explore today. One thing's for sure, the economic indicators are definitely sending out some mixed signals. The data coming in from various sectors of the economy is painting a rather complex picture. It's not just a matter of looking at one or two metrics anymore. We have to consider a multitude of factors to get a clear understanding of where things stand. On the one hand, we've got low unemployment rates, which is typically a sign of a healthy economy. More people are working, and that usually means more disposable income circulating through the market. This should, in theory, lead to increased consumer spending, which is a key driver of economic growth. And indeed, rising wages are another positive indicator. When people earn more, they tend to spend more, which boosts demand for goods and services. This can create a virtuous cycle of growth, where businesses expand to meet increased demand, leading to more job creation and even higher wages. On the other hand, we've got shrinking profit margins for many businesses. This is a worrying sign because it suggests that companies are facing higher costs or lower revenues, or perhaps both. When profit margins shrink, businesses may cut back on investments, hiring, or even lay off workers, which can have a ripple effect throughout the economy. And let's not forget the rapidly increasing national debt. This is a significant concern because high levels of debt can lead to higher interest rates, which can stifle economic growth. Moreover, if the government has to spend more on interest payments, it has less to invest in other critical areas like infrastructure, education, and healthcare. It's a tricky situation, and one that's going to require some careful analysis if we're going to make sense of it all. Economists and policymakers will need to weigh these mixed signals carefully to chart a course forward. The Federal Reserve, in particular, will play a crucial role in navigating these turbulent waters, as its decisions on interest rates and monetary policy will have far-reaching implications for the economy. When it comes to the stock market, geopolitics is always a major player. From trade wars to elections, there are always external factors that can affect the market's performance. And in 2025, we've got a whole range of potential flashpoints that could send the market spiraling. From the ongoing tensions between the US and China to the unpredictable nature of Middle Eastern politics, there are certainly plenty of reasons to be nervous. One of the most compelling arguments for a potential crash is the fact that the market has been on a nearly decade-long bull run with barely a hiccup in sight. This unprecedented growth has led many to wonder if the market is in a bubble, poised to burst at any moment. Historically, markets have shown cyclical behavior, with periods of rapid growth often followed by significant downturns. That's a long time for the market to keep going up, and it raises questions about sustainability. Investors are beginning to question whether the current valuations are justified or if they are inflated due to speculative behavior. Some would argue that we're overdue for a major correction. They point to historical precedents where long bull runs have often ended in sharp corrections, causing significant losses for those who were unprepared. The fear of a looming correction is palpable among cautious investors. On the other hand, there are those who point out that the underlying fundamentals of the economy are still strong, with indicators such as GDP growth, low unemployment rates, and robust consumer spending painting a positive picture. These optimists believe that as long as the economic fundamentals remain solid, the market will continue to thrive, and that the market will continue to reflect that. They argue that the current market growth is not just a result of speculative trading, but is backed by real economic progress. This camp believes that any potential corrections will be minor and short-lived, as the strong economic foundation will support a quick recovery. One thing's for sure, though, the signs are certainly there if you know where to look. From the inverted yield curve to the increasingly volatile price of oil, there are plenty of warning signs that something might be amiss. But what does it all mean? Thanks for watching, everyone. If you've got thoughts on the potential crash of the stock market, be sure to let me know in the comments below. And if you're looking for more content on market trends or investment tips, be sure to check out my other videos. I'll see you in the next one.